The latest economic indicators present a challenging outlook for the coming quarter.
Welcome to the deep dive. Today we're looking at the August 2025 jobs report from the U.S. It really felt like a turning point.
Yeah, definitely. More than just a miss.
Exactly. It sort of shifted the whole economic story. So we're going to unpack what happened, why it's such a big deal, and, what it might mean for you and the economy overall.
It's quite the picture when you look closely. The core data shows the U.S. added only, get this, 22,000 non-farm payroll jobs in August.
Just 22,000? That's way off the mark, isn't it? The forecast was, what, 75,000?
Exactly. A huge miss.
Yeah.
And on top of that, the unemployment rate, it ticked up to 4.3%. That's a 4-year high.
Wow.
But here's the really striking part, I think. The downward revisions to the previous months, they were historic.
Revisions? How bad?
Well, June, for example, was revised down so much it actually became a loss of 13,000 jobs.
A loss. So negative job growth for June.
Yes, the first negative monthly number we've seen since way back in December 2020. It really signals the economy is, it's at stall speed.
Stall speed. That sounds precarious, like it could easily tip over.
Precisely. It means growth is so weak, the economy is really vulnerable to falling into recession. There was, one small bright spot.
Okay.
Job growth was pretty much all concentrated in healthcare and social assistance. They added 47,000 jobs. That sector alone accounted for like 87% of all private sector jobs created this year in 2025.
87% in just one area. That downward revision to a loss, though, that's tough. It really makes you ask, what's driving this slowdown? What forces are behind this stall speed?
Right. It's not just one thing. We're seeing kind of multiple headwinds hitting at the same time.
Okay, let's unpack those. President Trump's tariffs, they've been pretty aggressive. That seems like a key factor.
Absolutely. You see it clearly in manufacturing. That sector lost 12,000 jobs just in August.
And over the whole year.
There's about 78,000 jobs gone over the past year, which, directly contradicts the stated goals of those policies.
Yeah, it definitely runs counter. But it can't just be tariffs, right? What else is going on?
Well, another big thing we're seeing is the acceleration of AI adoption. It's quite noticeable now.
Meaning companies are actually choosing AI over hiring.
It looks that way. Deploying AI systems rather than taking on more staff. This report suggests AI isn't just some future idea anymore. It's here now, and it's reshaping the job market, especially for white-collar roles.
That really hits home, and we are seeing the numbers reflect that, aren't we? Like rising unemployment for white-collar workers and recent college grads.
Yeah, exactly. For recent grads, the rate jumped to 9.3% in August. It was only 5.4% back in January. That's a big leap.
9.3. Wow. And Goldman Sachs had that estimate, right? Something like 300 million global jobs potentially affected by AI.
That's the estimate. Yes, huge number. And look, while people debate the long-term effects of AI, this report is showing us the immediate impact right now.
Okay, so tariffs, AI, what else?
We also can't forget the Fed, the impact of all that monetary tightening, those 11 interest rate hikes they did back in 2022 and 2023.
Right, the lagged effect.
Exactly. We're seeing the full force of that now, contributing to this broad slowdown. It's important to see that while healthcare is growing, the jobs being lost elsewhere, like manufacturing or those disrupted by AI, it signals a deeper change, a transformation maybe, not just a dip.
It's a complex picture. But interestingly, the financial markets, they reacted, well, positively, which seems odd given such a weak report.
It does seem counterintuitive, yeah. But it's that classic bad news is good news scenario playing out in the markets.
So stocks went up.
They did. Both the S&P 500 and the NASDAQ rallied, hitting new record highs, actually. And bond yields, especially the 2-year Treasury notes, they dropped quite a bit, reached a 3-year low.
Okay, so explain that logic. Why does bad economic news make markets happy sometimes?
Well, the market basically sees this weakness as a clear, undeniable signal that the Federal Reserve has to cut interest rates soon, like at their next meeting in September.
So it forces the Fed's hand in the market's view.
Pretty much. Fed Chair Powell had already been talking about a shifting balance of risks. Now, after this report, the path to easing seems, almost certain. Market odds put it at about 84% for a quarter-point cut.
Right, so the market's betting heavily on a rate cut. But, does focusing just on the Fed action risk missing those deeper structural changes we talked about, like AI?
That's a really important point. The market often have a short-term focus, primarily on the Fed's next move. And we should also mention, impartially, of course, the political side here.
Right, the context.
President Trump was quite critical of Powell, and he fired the head of the BLS. the agency that puts out these job numbers, accused the data of being rigged.
Yeah.
We're just reporting that happened. But the implication, you see, is that this kind of thing can erode trust in official statistics, which makes it harder for everyone, businesses, individuals, policymakers, to make informed decisions.
That loss of trust is a serious issue. So, bringing it back to our listeners, what does all this really boil down to for you? Two things seem clear. One, the economy is, well, undeniably slowing down. And two, the Fed looks set to start cutting interest rates. Monetary easing is coming.
Seems almost certain.
But here's something to think about, a kind of provocative thought maybe. How does this mix a slowing economy, these big structural shifts like AI and political pressure on the actual data we use, how does that change what a healthy job market or even good economic growth looks like for you personally going forward? What new signs or signals should you maybe start paying attention to in this rapidly changing landscape?